So, welcome everyone. Shilpi Thapar again, with a very critical element of corporate governance, director and officer indemnification insurance policy, which is very famously known as D&O insurance. So, when I enter in the boardroom for board meetings for my clients or for advising the clients, what is the biggest boardroom fear I normally observe is a risk of personal liability. Most of the directors, they are reluctant in expressing their views. Most of the directors, they keep silence, thinking that silence is golden. And but what is the reason behind it? So there's a psychological reason behind it is the fear of personal liability. So if I speak anything, if I express my views, and if it goes wrong, what it goes wrong in the future? What will be my future liability? So here comes the role of D&O insurance. D&O insurance is nothing but it is a protection shield. It's an extra layer of safety for the directors who are taking so complex decisions in ever evolving regulatory changes. So when you are a director on the board, you can imagine the level of decisions, the complex decisions you take, to steer the organization ahead, and obviously that comes with the your personal liability. Now, even the regulations is also supported for this kind of D&O insurance policy. So whenever I advise my clients, I always tell that there has to be a provision in articles of association of the company for indemnification of your directors and officer, and obviously D&O insurance will be backing that stand. Secondly, under section 197, subsection 13 of Companies Act 2013, it has also mentioned about the D&O insurance that it will not be included in the remuneration structure of any director. Again, under LODR section regulation 25(10), it mentions that it is mandatory for top 500 listed companies to avail the D&O insurance for the independent directors. So, what is the benefit, of availing the D&O policy? Why the board should consider, for availing the D&O policy for its directors? Number one, it gives the protection against your personal liability. Whenever you take a decision on the board, if you know that my personal assets are secured, then your confidence will be to the next level. You will be able to take a complex decision in a very easy way. Secondly, it will attract a talent. If the outsiders knows that the company is having a good risk management structure, corporate governance structure, they are availing this kind of insurance policies for their directors and for their KMPs, then obviously the company will attract a good talent, not on the board but in the organization as a whole. And thirdly, it will repose the confidence of the stakeholders, your investors especially. So I think this is a very important aspect of the corporate governance, and what I feel most of the directors are not aware of this kind of policy, neither they are asking for this kind of protection when they join the board. So to dive into this critical element of corporate governance, we are having Mr. Parth Desai with us. So just to introduce very briefly, he's a dynamic second generation entrepreneur in the insurance industry. He brings a unique perspective on corporate risk management with an MS in electric engineer from the University of Southern California and experience as a former chip designer engineer in Silicon Valley. Parth now leads a director of ND Insurance Broking Private Limited and Shubhla Consultancy, which is a very renowned insurance consultancy pan-India. He is also actively engaged in key leadership roles, serving as a joint secretary of TAI Ahmedabad, a governing council member of FICCI Gujarat, and on the Gujarat State Council of Indian Chamber of Commerce. With past expertise and passion for risk management, he will shed light on how D&O policy empower corporate governance and support leaders in confidently navigating complex responsibility. So, Parth, welcome to the show.
So, thank you, Shilpi. First of all, I'm really happy to come on this director series in conversation with CS Shilpi Thapar. And thank you so much for this opportunity.
Thank you. So, Parth, let's start us off. Could you explain in very simple terms that what the D&O insurance is and why it is considered an essential in safeguarding corporate directors and officers?
Sure. See, a D&O policy is an insurance for management liability, right? So I'll start with the problem. So when you lead, as you rightly said, when you lead an organization, it requires the directors and all the key officials to make some critical decisions, and they
Right.
also have to steer the organization towards continuous success.
Right.
While you are doing it, you also have to navigate through certain regulatory and complex legal issues.
Right.
So if you're doing those decisions, if you're making those decisions, you are liable for your personal decision that you're making on behalf of the company, right? So what does that mean? That means if you're taking a decision which can be legally challenged
Right.
by somebody, then you need to have a safety net. So D&O insurance provides this safety net, as you rightly said, and it is an insurance which protects all the directors and officers' personal financial losses arising out of the lawsuits for which the wrongful decisions are made during those tenure.
Exactly.
And so that covers your judgments, your settlements, and it also safeguards your personal assets, most importantly,
Right.
and reputation.
That's most important. Your
That's correct.
reputational risk is the biggest risk nowadays.
Yeah.
And what I think, Parth, that this is a very crucial element, for a proper, effective corporate governance in any organization. Because see, there has to be a quality of decisions which is made.
Correct.
So if you are feared, what I already mentioned, that the biggest boardroom fear is the chances of potential personal liability.
That's correct.
So if you are feared, the directors are feared, they are not able to have open discussion, they are not able to express the views because they may fear that okay, if I express the views, it is monetized, it may create a problem in future for me as far as my personal liability is concerned. So what will happen? You can just estimate the quality of decision which is taken and how far the organization will sustain like this.
That's correct.
Because
So I think
you have to take a quality decision on the board, and I think this will give a confidence to the directors that okay, something went wrong, but if I am having a good intention in taking a decision, then I will be protected.
correct.
So I think this should be mandatory for all the companies. Maybe it's a larger company, smaller companies.
Absolutely.
So, yeah, exactly. So now diving a bit deeper, Parth, could you elaborate on how D&O insurance specifically protect directors from personal liability in cases where there are allegations of wrongdoings and a corporate mismanagement?
Sure. Shilpi, I would like you to tell that first of all, you to understand who can sue this director.
Right.
So I would say employees can sue your directors because of any if they feel that there are any harm which is done in the employee practices, discrimination or a labor law violation. Your competitors can sue the company or the directors
Right.
because of the antitrust violation. Your vendors can sue you because they see there is a breach in agreements, there is a breach in contracts. Most importantly, your shareholders, if they think that because of the decisions which are being taken by those officers and directors, the company stock prices are falling down or the finances are not being managed properly. Lastly, the customer. See, the customers can also sue company and directors for the product defects, for whatever false advertising or any unfair practices that you're doing in the market. So, if I were to summarize all this, what are the common causes? I would say breach of duty, fraud,
Exactly.
misleading statements, corporate governance issues, negligence, libel or slander, employee practices issues. So now coming to your question, original question, that how does this policy protect? See, the directors and officers policies typically what we call have three sides. We call it side A, B and C. So side A is typically the protection for the officers and directors on a personal front. Just to give an example, I'll give all the examples in all the three sides. Suppose Mansi, she is the CEO of a tech company, and Mansi is accused of improper financial transaction which being made. Now there are shareholders who are coming and suing Mansi for this improper judgment or the financial misconduct. Company does not have funds to safeguard Mansi, so this policy will come in and it will safeguard the Mansi for all the litigation costs.
Right.
And all the settlement which will happen for the future.
Right. And damages also.
All the damages also,
Yes,
correct.
yes.
So this is side A. Now coming to the side B. So side B is popularly known as like a reimbursement to the company for using and protecting their funds, protecting their directors and officers. So just to give an example, I would say random name, say Rohan. So Rohan is a chief financial officer, and now he's accused with a lawsuit against financial misconduct. Company has funds, but company do not want to start their funds for the litigation cost. So this policy will again come. If fortunately, if you have taken the side B, the insurance policy will cover those all the transactions which are happening for litigation cost, all the settlements, defamation, whatever is happening, it will cover that. Side C is protecting the company on itself.
Okay.
These are typically cases where security litigations are there.
Okay.
If you have a lawsuit filed for the claim for wrong,
Yeah.
So protection. So the side C is the protection for the company itself. The company will protect itself when there are typically cases of security litigations.
Okay.
Just to give an example, a leading tech company who specializes in software development, right? They faced the litigation for security allegations, misrepresentation or fraud.
Okay.
Now the claim is being done on the company itself, right? So this policy will cover all the defense costs, all the judgment costs, all the damages to be paid.
Okay.
It will also ease their financial lines,
Right.
because you are not burning your cash to protect your company.
Right.
So this is typically how a D&O policy will look.
This is an excellent, I think, a protection instrument for the board, and I think the directors are not knowing that when they are taking decisions that personal assets are also involved. The company is not knowing that the assets are involved if anything goes wrong. So I think this is the importance is underestimated, I think. So, and there has to be a main board agenda and has to be discussed regularly in the board meetings. This D&O policy, insurance coverage should be a part of your board agenda in every board meeting, I think.
Right.
Okay. But an important aspect to consider with any insurance policy is what's not covered, the exclusions, yes?
Yeah.
So what are some common exclusions in this D&O policy that director should be aware of?
So I think in just on a lighter note, Indian insurance policies that say that there is a long list of exclusions.
Yes.
But I think it is very important to understand those exclusions. First of all, I think the most important is any fraudulent activity which are willful misconduct or intentional in nature.
Yes, malafide intentions.
Malafide intentions.
Yes.
This will not be a part of the coverage in the D&O policy.
Okay.
Second, I would say fines and penalties. See, suppose, just to give an example, if you are supposed to file a GST on every 20th of the subsequent month, if a company's officer is not doing it, this policy is not going to jump in for coverage of the interest lost, covering the interest or the financial penalties that are going to be get imposed on the company. The third, most importantly, is we call it an insured versus insured concept. See, this policy typically covers the lawsuits and the claims which are filed from outside organization to the directors and officers. Now, suppose you have a company and there are 4 directors in the company. Now, one director is suing the other director.
Okay.
So now such cases will not be a part of this policy, because the only intention of the policy is to cover the claims which are arising out of the organization.
Oh, okay.
Right?
Interstate claims are not entertained.
That's correct. No, because the policy will not able to identify that on to which director they have to protect.
Exactly.
It cannot be on the both the sides, right?
Right.
Fourth important is it does not cover bodily or property injury, because you have a separate product for it.
Right.
So all your fire insurances and industrial audit coverage should be placed, because all the physical damages to all those machines and assets and stocks are never going to be part of this policy.
Right.
If you are buying a policy right now, any prior litigations which have happened or there are ongoing litigations which are going on directors or on the company will never be a part of this policy.
Okay.
Most important, I think most of the few companies or few directors, they don't know, all your intellectual property rights, the disputes between for the intellectual property rights are not a part of this the coverage.
Okay, theft of IPRs.
So theft of trade secrets, theft of IPR
they are not covered.
They are not covered under directors and officers policy.
Okay, I think this is a very rare aspect which the board knows. You know what happens in mostly the D&O policy is placed in the board, and the risk management officer or a CFO just brief that okay, we need to take a coverage of so and so amount, and generally it is approved. So the board never looked upon that what are the exclusions. I think this is the most important aspect, because otherwise there is no use. You need to be. So it is very important to read the fine print.
That's correct.
Before subscribing to
So
this
in
kind of
foreign,
policies.
we have a provision of taking IP insurances. I think
Okay.
India is an evolving market. I think in future we will have such products, but
Right.
currently it is not offered.
Right.
So IP insurances are already there in
Right.
the foreign markets.
Okay, Parth, with risk evolving so rapidly, especially around the areas like cyber threats, ESG compliances, class exclusions, which is obviously not prevalent in India, and health and safety.
Yeah.
So, how can directors make sure that their DNO coverage is sufficient to address these new challenges?
Shilpi, I would say that's a brilliant question that you are asking. I would say, just to give you a background of cyber, I would touch base cyber first.
Yes.
See, there are distinct coverages between a cyber insurance policy and a D&O insurance policy.
Right.
A cyber insurance policy will typically have a coverage for tier 1 and tier 3 problems. Like, just to give an example, a cyber insurance will cover the cost of an investigator who will determine the incidental damage, to do what extent the damage has happened. It will cover the business interruption loss. It will cover the expenses to repair networks. See, D&O policy will not have this coverage because it does not have a coverage for cyber risk. What typically it covers is security exchanges and your regulatory affairs. And cyber policy will not have coverage for such risk.
Okay.
So as an expert, I would suggest to all the companies that you please review both the policies.
Okay.
If you need an adequate coverage on the entire spectrum of the risk that you are assessing, you should have both the policies, because there are certain things which will not be a part of your current D&O policy.
Right.
So just review to have both the policies together. That will give you the right coverage.
Great suggestion. So, do you think that insurers are exploring to include this kind of risk in DNO policy now?
So I would say that see, as the fundamental coverage that D&O policy offers, it will have all the litigation cost to the directors and officers will get covered under the policy. But in cyber, there are subsequent consequential losses also to the business,
Right.
and that quantum could be much more than this litigation cost, because see, if the cyber attack is happened on your server, there will be huge expenses to repair those networks. There will be huge expense for business interruption.
Right.
Such things will not be a part of this coverage.
Got it.
So yeah, now talking about ESG.
Yes.
So I think it's a very
Hot topic, yes.
Yeah, it's a very hot topic, and now there is a lot of pressure which is coming in from all areas to have an importance given to the ESG.
Right.
Customers are filing class action suits because for the companies, if they made false claims for sustainability of the products.
Okay.
Employees are choosing depending upon what social corporate responsibilities you are following, and they are choosing the right employer.
Right.
Regulators are demanding very detailed disclosure on climate related risk. Investors, most importantly, they are targeting boards and directors like anything, and
Yes.
they just want to make sure that you are on compliance of your ESG
ESG
norms.
scores are taken into
ESG score, yeah,
consideration
correct.
now. Yes.
So I think this ESG landscape was not there, frankly,
A
few years
decade
back.
ago, yeah, exactly.
It is a hot topic, and so D&O policy definitely covers any litigation which will happen on non-compliances of or whatever the claims that are being sued to the company,
Right.
or the directors in personal capacity. I would suggest that it should be reviewed thoroughly, because if you are taking a policy just to cover your ESG score or for pollution legal liability,
Right.
so generally D&O policy will have an exclusion on pollution.
Okay.
Does not mean that it cannot be covered, but you just have to make sure that why you are opting this coverage, and whether it is covered under your add-on coverages or by default limits are there or not.
Oh my God, this is a very critical aspect, and I
Yeah.
think we need experts like you to first analyze the risk involved, then what kind of policies is suitable, and then it has to be approved in the board. I think there are lots to be seen
Yeah, I
while
think-
deciding for the policies.
See, because D&O is a very subjective policy,
Yes.
and
It is restricted also.
It is restricted also, and it is a curtail product. So it is
Yes.
a bespoke product for your company.
Yes.
So it is very important to evaluate the risk factors associated with your company.
Right.
What kind of litigation may come
Yes.
on probably cyber or ESG or any kind of other litigations, and the policy needs to be taken appropriately.
So I think the risk management committee has to be more sensitized about this, and has to be on the it should be on a regular agenda on these meetings.
That's correct.
It's very critical actually to analyze this. Okay, Parth, finally, when it comes to negotiating or renewing D&O policy, what are the critical factors that director should keep in mind to ensure that they are well protected, especially their personal assets, and how much coverage is enough, for any company, for this availing this D&O policy?
See, I would say fundamentally, I think it will start from identifying, as I spoke earlier, identifying the risk which
Right.
are very significant based upon your operations and the scale of your business.
Yeah, size and type of
Size and
business.
type of business.
Yes.
You also determine that whether you want all the sites, like I said, site A, B or C. There are different coverages available which are like an add-on coverages. Which has to be opted. It is not a by default coverage.
Okay.
So I would suggest that a company must have an employee practice liability, because industry has seen many claims on wrongful termination, discrimination,
Okay.
or harassment cases.
Right.
So this is not a by default
It's increasing
coverage.
day by day now.
It is increasing
Yes.
day by day. There are special coverages available for emergency cost, crisis response, mitigation and evidence of the services. Very interesting is if you have typically in India, if it is a family board, there are spouses also involved as a directors.
Okay.
So there is a special coverage available for spousal addition also.
Okay.
So company should definitely look at it. Now talking about what should be considered and how the premium is determined, it is determined by the size and scale of the revenue.
Right.
The number of employees that you have, just to have a fair assessment on employee practice liability coverage. And the third and the lastly is, if you have got any previous litigations or any claims happened on your company or a directors before, you should take those in your mind.
Yes.
And just make sure that you have an adequate limit
Right.
of the indemnity.
Risk matrix has to be done properly.
Absolutely,
Yeah.
yes.
So I think it's very crucial for the board to reevaluate their D&O insurance coverage on the regular basis in the board meetings and then in the risk committee meetings. That's very crucial for them. Okay, lastly, Parth, what is your personal experience with the corporates, about the response on availing the D&O insurance policies in India? So whether it is only for the larger companies who are minting in $1 billion, or whether smaller companies should also opt for this kind of policies?
I think that's a right question, because so what I see as an experience, I think the demand is increasing.
Right.
All the large corporates would definitely have such products because they have the risk matrix and know what may go wrong, and then they have those officers on their board.
Right.
They can evaluate the risk and they can advise them to take an D&O insurance. I would say otherwise. I think if you are a smaller company, if you are an SME and MSME, those companies that do not have a bandwidth, financial bandwidth, I would
Right.
say, to cover such sudden litigation.
Right.
It may wipe out your entire year's profit or probably 10 years of profit.
Right.
So it is very important to have D&O insurance for smaller companies.
Okay.
Secondly, you can always hire and attract. You can attract good officers on the board if you have this policy.
Right.
You will attract good talent.
Exactly.
So if you want somebody on your board, and if you have this policy, it can be a selling tool for you.
Yes,
That we are
yes.
having this policy, and it will
Yes,
safeguard
yes,
you
yes.
for whatever decision that you are taking.
Right.
So I think more employees will be willing to at a senior level
More
position. and
employees,
then-
more KMPs, more good quality of directors will be attracted that
Absolutely.
this company is having
Yeah.
effective corporate governance framework and risk management in the company. So obviously that will increase your reputation as a whole.
Interestingly, I would also touch base on this, that now I think I was just talking with couple of underwriters. In India, there is a talks, or I think couple of insurance companies already brought this product where individual director
Okay.
can also buy this policy under their respective, under their names.
That's so important, because many companies are not taking it seriously
That's
because
right.
of the cost involved, and or they are not aware of it, the importance.
Yeah.
But I think only thing the board need to consider, that if you want to protect your directors from a personal financial liability and protect their financial assets, I think this is must. This is non-negotiable for any company where board of directors are there.
Absolutely.
So I second you, and rightly said that. Okay, Parth, what a fantastic chat. Thank you for coming and sharing your valuable views on such a critical aspect of corporate governance, which even the board are not aware of, most of the directors are not aware of. And I think it is a much underrated, a board protection tool. And every company, every board should take it seriously to, to analyze their requirements of these policies and protect the directors, so that the quality decisions comes and it improves their corporate governance and the sustainable growth of any organization. Thank you so much, Parth.
Thank you, Shilpi, for
Thank you.
giving me the opportunity to share what I know. Thank you so very
Thank
much.
you, and I hope my listeners, our listeners will benefit from your valuable insights. So thank you very much. Until next time, thank you.